Welcome back to the channel, everyone. Today, we're going to talk about something that could be great news for income-seeking investors, Whirlpool, NYSE, WHR, and its enticing 7.2% dividend yield. With the housing market being a key driver for Whirlpool's business, recent comments from Home Depot's management have shed light on the future outlook for this stock. Let's dive into why this could mean good news for Whirlpool investors. Now Whirlpool has faced some serious concerns lately. As you might have guessed, one of the biggest worries is the housing market slowdown, driven by high interest rates. A slower housing market typically means fewer people spending on discretionary purchases, like household appliances. But lower interest rates can help turn this around by making mortgage payments cheaper, which usually boosts home purchases and renovation projects. Exactly where Whirlpool shines. But it's not just the housing market. Whirlpool has also been dealing with shrinking margins, especially in its core North American market. Their EBIT margins have dropped significantly over the past year, as shown by their recent earnings reports. A key question now is whether this decline is temporary or a sign of deeper structural problems. Could Whirlpool be losing market share? Or is it just a cyclical issue? Let's take a closer look at what's happening. Whirlpool's management has pointed out that while replacement demand, when people need to replace old or broken appliances, remains steady, there's been a significant drop in discretionary demand. That's when people buy new appliances during home remodels or upgrades. These discretionary purchases tend to have higher margins, and that's exactly where Whirlpool has been struggling. But here's the twist. Home Depot's recent earnings call actually supports Whirlpool's position. In its Q2 earnings presentation, Home Depot's Executive VP, Billy Bastick, confirmed that larger discretionary projects, like kitchen and bath remodels, have seen weaker engagement due to higher financing costs. CFO Richard McPhail added that categories like appliances, kitchen, bath, flooring, and lighting have all been under pressure as customers delay these larger projects. What does this mean for Whirlpool investors? Well, it suggests that the margin pressure Whirlpool has been facing could be temporary, tied to the broader economic environment, rather than a fundamental problem with the company. Home Depot's comments align perfectly with what Whirlpool has been saying. Discretionary spending is down because of the housing market, not because Whirlpool is losing its competitive edge. As interest rates eventually decline, we could see a resurgence in the housing market and discretionary spending, which would be a tailwind for Whirlpool. So, while there's some near-term risk, Whirlpool's high dividend yield still makes it an attractive option for income-seeking investors, especially those willing to ride out the current economic conditions. Before we wrap up, let me remind you, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. If you found this video helpful, please give it a thumbs up, share it with your friends, and don't forget to subscribe to the channel for more insights into the stock market. Thanks for watching.